Good afternoon, good evening, good morning. Hi, everybody. Sound check. How's the sound out there? Could I get a little feedback from you guys? How's the sound? How are you doing today? We're good? Okay. I have to tell you, tonight's presentation is going to be a flop. I wouldn't expect much. You're probably going to log out early, not come back again. The reason I'm saying that is because of something I learned a long time ago, keep expectations low. I went to, you know the Top Gun movie that came out, like, what was it, a year ago? Now, whatever, the sequel. Well, my wife and I just happened to be out that day. I didn't even know, I'm not, I like Top Gun like anybody. I saw the first movie years ago, and I think I saw it once. I maybe saw it on TV a little bit here and there. Good movie, I liked it. I'm not a Top Gun nut. But we happened to be out, and it was one of those times you ever go out and just say, well, let's pull in and see a movie, and it was like late afternoon, we pulled in to see a movie. Didn't know what we were going to see. And we're just looking at the pictures, like, oh, Top Gun's out. Okay, well, let's see Top Gun, because there's nothing else out there, right? So we went in there to see Top Gun, without any reviews, just saw the commercial a couple times, no expectations at all. And I have to tell you, when we sat through that, I came out saying this is the best movie I ever saw in my life. You may not agree with me, I don't care, it doesn't matter. For me, it was the best movie ever. And I had zero expectation. I didn't even love the first one that much. It's not like some Top Gun nut. So what happened, of course, is we happened to see it on opening day. And then, of course, the following week, what happened is, it came out on TV, and all the greatest movie in the world, blah, blah, blah. And then we told our kids, their family, friends, and everything, hey, we saw Top Gun, greatest movie in the world. So we check in with the people who saw it a week later, family, and they're like, yeah, it's okay. And why do they all think it's okay? Well, because they heard on TV, they heard from us, oh, greatest movie in the world, and your expectations get so high you never, ever really appreciate it. But trust me, if you had zero expectations, it was the best movie ever. So the truth of it is, I think tonight is actually the best presentation I've ever done or ever will do that I can present to a group like this and try and get some meaningful points across and give some learning opportunity. So let's begin with it, because I have, as usual, way more than I have that I could possibly do. I'm going to constantly pause because I wrote so many notes to myself. There's so much in my head when I went through this a couple times. I have tons and tons of notes to myself. I had some comments about funny stuff from today, but I don't have time, so we're going to get going here. Let's go. All right, strategy versus entry. Here's the opening slide. You guys read all that in your email. Don't need to go over that again. Opening comments. If you have learned strategies, trading strategies, that have built in them a certain entry, which most of you probably have, a breakout above the base, a buy setup above a bar, you are not a professionally trained trader. One of the edges you must learn is to use entries in addition to your trading strategy, not just as kind of a hang-on ornament, but rather as an actual addition to your trading concepts. The entry is everything. Period. I also have people who want to debate this. Let me end it for you. There is no debate. If you don't agree with me, I am right and you are wrong, and learn how to adjust your thinking. The entry is everything. Like always, whenever I teach, I don't leave it as my opinion. I'm going to prove that to you in the next 60 minutes, that the entry is everything. And also, proof, one of my favorite expressions, this is a quote from me, I would rather have a great entry with a so-so setup than a so-so entry with a great setup. I don't just believe that, I know it to be true. Many of you may not get that because you think there's magic in entries. There's magic in understanding charts and every part of the three-legged stool. First question for you guys. Well, I have a nice sip of ice-cold water sitting next to me with just a hint of grape flavoring in it. Number one purpose of a great entry is what? And if you've heard me say this 100,000 times, give everybody 10 seconds to put the wrong answer on. Number one purpose, everybody, of a great entry is what? Go. Did I mention the first person to answer correctly wins? Hang on, let me get a sip of water. Wins absolutely nothing, but it would be nice if you typed first. Low risk, better profits, bragging rights. What does low risk mean, Sammy? I want to take a moment and go into that. And I know you probably have to type, so you can't talk with me, so you may not keep up. But what does low risk mean? Just give me that first up. What do you mean by low risk? Because the way people use the term risk in trading does not make sense to me. If it does make sense to me, then it's just wrong also. And I don't know, I'm not sure how you, what do you mean by low risk? Here's a big pause in the tape that will have to be edited out when it gets presented onto the free stuff page later this week. Lowest cost, highest potential profits. Okay. So you are basically saying that the entry determines your reward to risk, right? That's how you're using the term, so to speak. Because sometimes people say risk, they're talking about the dollar amount you might win or lose, but that really has nothing to do with your entry. That has to do with your share size, right? Okay. So while it's true that a great entry, and some of you had the right answer, I'm not going to call you out, you know who you are. The purpose of a great entry is to keep you out of a trade you shouldn't be in. That's the number one most important thing. It is far more important than any concept of share sizing, risk reward, etc. It's way more important. I'm going to touch on this a couple of times, but if you're wondering why I think it's more important, think about what your trading results would be like if using a superior entry concept kept you out of 1 of 4 of your losing trades. Everyone, would that change your results fairly dramatically if you could go through and take every fourth full loser, and just cross it off the books? Would that help a lot? Game changer. And that is extremely conservative. I'd have to say, when you really understand what I'm talking about, it probably saves me from a lot more than that. So trading, if I asked you what trading was about, I wouldn't get the answer I like. But trading is simply about making money, and it's not necessarily a lot of the rules that people come up with, right? And one of the ways to make money is to not lose. You know, that reminds me, a good example of that. Sometimes people ask me the best streak I ever had. And the best streak I ever had was 28 out of 29 winning days. Now, the reason I have to phrase it like that is because it was 14 winning days, 1 losing day, and 14 winning days. And the losing day was less than the average winning day by far. So that was a great streak, and that was, honestly, it was a while ago. But what I always remembered about that was, it's just incredible how fast the money piles up when you're not taking away. Now, you can't always do that naturally. I mean, we try to average so much a day, so much a week, whatever, and it's because some days you have some really nice days as a day trader, or as a longer term trader, maybe you have some really good weeks or good months, and then you give back some of it sometimes. You have to have some losers in there. So we try and have really good times. When we have good times, you give back some. But it's amazing when you don't give back anything, how the money just incredibly piles up. So keeping that in mind, an entry keeping you out of trades that turn out to be bad. And notice the way I phrase that. I didn't say to keep you out of bad trades. You should identify it's a bad trade the best you can. But trades that end up being bad, that end up stopping out. Naturally, you shouldn't be taking a trade that appears bad. But there are aggressive trades that you can take where sometimes the entry may be the one that keeps you out of it. However, notice the wording here. Oh, you know what? I have to time out a minute here. I want to actually diligently look at my slides that I have in front of me, because I have so many comments in here as I went through these slides 2-3 times. I just have more than I can say in an hour. I tried to come up with an analogy for traders who don't understand the value of an entry. I couldn't really come up with one. I'm so good at analogies. I come up with an analogy for everything. I tried to come up with a cabinet maker that just has 1 screwdriver, right? He doesn't have 4 screwdrivers or 4 chisels or whatever it is. How amateur that would be. But to me, it's the same thing. Traders that use one type of entry, which, believe it or not, most of you probably do. I mean, not all of you, of course, but a lot of you probably do, because you were taught some kind of strategy, right? And when you're taught that strategy, you were taught when to get into it, right? And yet that gives up such a huge advantage you have, right? So once, however, you have committed to be in the trade, right? Once you've made that decision, once it becomes beyond breakpoint and you're saying, okay, I'm into this thing. Once you make that decision, that single instant in time, every penny that you wait beyond that gets added to your stop and gets taken away from your target. Is that true or not? And once you've decided, here's go time, there it is, there's go time, right? And there's, whoops, I waited a little bit longer, right? Every second you wait, every penny that you wait, that penny gets added to your stop and taken away from your target. Kind of a two-prong effect, if you will, right? So it's adding all the time to stop taking away from the target. But that's, of course, once you're committed, once you've decided to get in, Any second you wait is not good. Some people have said to me, well, if I get in later, in order to keep the risk reward constant, I'll increase my target. Does that make sense? A little sense, a lot of sense? Somebody who were to say that would be completely ignorant of any trading concepts whatsoever, right? The target is the target. We may not know where it is, right, John? I don't know where targets are most of the time. But wherever it is, right? It is where it is. We may be blind to it at the moment, but it is where it is. And to say that I'm simply going to push my target out, it makes no sense at all. I'm not going to get into it now, but those of you who train with me know that I'm not really big on setting reward to risk because there's many other variables involved, and it comes down to the concept of expectancy. I think if you require a trade to have a 3-to-1 reward to risk, I'd have to hear your rationale, but I probably would not agree with that. Without any more knowledge, I would say that that was not the proper way to think about trading. To say I'm going to increase my target would be kind of like saying, well, I could fly to California or I could drive. If I fly there, I'll get there in 4 hours. If I drive, well, you know what? I'll drive, but I'll just move California closer to me, or I'll just stop in Indiana because that's where my 4 hours will take me. It makes no sense whatsoever. Your stop is here, your target is here. That cannot be changed, right? So if you decide to get in here, right, wherever that is, if you make the decision, again, the decision to get in, of course, is a big decision, right? We've decided there's some kind of strategy here. And we decided that that strategy will, quote unquote, trigger somewhere on the way to this target. So if you get in here, just as an example, you have 90% of the way to go to the target, you only have 10% beneath you for the stop. Well, that obviously creates a huge potential reward to risk, right? But if you wait longer, well, then maybe you're only got 60% left to the target and 40% is beneath you. And you've taken a 9-to-1 reward to risk, which is, of course, a little close to insane, and brings it down to a 1.5, right? Is that bad trading to do that? Is that bad trading to do that? To wait so long that you decreased your risk to reward from 9-to-1 to 1.5-to-1? Is that a bad thing to do? Is that bad trading right here? Is this bad trading what you're looking at? No, yeah, absolutely not, Reg. It goes hand in hand with what I just said, right? Reward to risk in a vacuum doesn't mean anything. And if you're confused what I mean by that, well, what if this 9-to-1 trade that you're so proud of back here, what if you get it right 1 in 20 times? Well, you're losing money, right? What if this one you get right 80% of the time? You're making tons of money. You're making so much money you don't know what to do with it. So in a vacuum, it doesn't necessarily mean anything. But what does mean something is when you decide it's go time and how you react to that. So there is a disadvantage, of course, to getting in before you should, just kind of blindly, and that's you're trading with less information, so you're more likely to stop out. And because the stop is simply closer to your entry point, physically speaking, you're more likely to stop out. That's just a matter of math or physics, if you will, right? As part of this price, here's a little example I have to ask you. So you have some kind of setup out there you believe is a good setup, right? And you decide that you're going to take, now that you have a setup in place, and I'm not here, don't worry, let's just say you believe there's a setup in place. That's all that matters for this presentation today. You believe there's a setup in place. And you've determined that to be your entry, right? Assuming there is a setup in place here, we have some kind of trend, support, whatever it is that a good entry? This is probably entries most of you are used to using, and again, the answer depends. It may be a terrible entry. That's not necessarily an entry at all. But here's what I want to ask you. Have you ever taken an entry like this, right, where you pop over something and say, I get in, and then you sit here, there's your entry, and then you sit here, bar after bar after bar. And the whole time you're sitting there, you're saying, well, I'm not mad, I guess, that I'm in it, but I wish that I wasn't in it, because then I would maybe go in over where my first entry was. You ever thought that way, anybody? Has that ever been something you've run into, you've seen, you've wished, you thought about? That can be one of the detriments of acting too quick, right? Too quick, too late. What does that mean? Well, I'm going to get to that in just a second, a little bit. The concept revolves around the fact that using an entry to complement your strategies means that there's kind of an inverse scale, if you will. right? The more you like the setup, so to speak, the less you need to require from an entry. The more you like a setup, the less you need from the entry. The less you like the setup, the more you need the entry to kind of prove to you that maybe the setup is good. And of course, this would require, if you think about it, the concept of having one entry is why I say you're not a professional trader if you have one entry concept. You need actually a sliding scale, a variety of entries, which is what I use and what I teach people, to have a sliding scale, a variety of entries that can help kind of pair up where you think you are on the setup scale, so to speak. So that perhaps those little more dicier setups, you're using a threshold that helps prevent you from getting into some of those that turn out to be losers. And some of the better setups, maybe you're able to enter at an earlier moment and get more money from the trade than you normally would have. It's only common sense, in my view. Here's something I want to show you as well. The titles up here, I didn't really say these titles. Well, I did entry waiting too long, entry acting too quick. This next one was entry the balancing act, right? And then here entry is not just the pennies. So I want to point out it's not just the entry that can get you in a little better or maybe prevents you from losing a trade, right? Those are the two things we talked about. But the entry can permeate the entire trade. In other words, watch what I do here on these two identical setups. Obviously, these two charts here are identical from left to right. And if you really kind of can relate to this, type in number 1 on the screen at some point. And this is something that I do quite a bit. So let's say you have some setup here, right? And you determine that's going to be your stop for the setup, right? There's your stop. And you determine that moving up here somewhere, you're going to take an entry into this obvious an uptrend of some kind. So you end up getting in right there, okay? And you've determined based on something off to your left here that this is the target area right here, this star, all right? So you being a good trader, wait till you get to hit that star because that's only about a 1-to-1 reward to risk, 1.5 or something. It's nothing astounding. So you wait to hit that and you're getting closer, you're up maybe, close to 1 hour at some point. You're thinking, okay, I'm going to hit this target, things are looking good. And all of a sudden, boom, you just kind of collapse, right? Now, what do a lot of rookie traders do? A lot of rookie traders just sell here and because you can't go broke taking a profit, wrong. But what happens if you hang on, I'm talking maybe the next level of traders a little better that says, hey, I got to get to those targets. My stop's down here, there's nothing to do. But what happens when you go from being green to being up a fair amount of money? You're like, hey, yeah, and then you're losing that money, you're giving it up, and then you go red right here. What happens to you psychologically, everybody? Think about it a minute. You've been in this situation all the time. Everyone is, right? You're green, you're a winner, you feel good about it, you're making money, you turn red, and then these thoughts go through your head, wait a minute, somebody told me I'm not a good trader. I'm letting profits go to losses. That's got to be bad, right? It's not necessarily true. I don't know of many trades that just go from point A to point B without hesitating, right? So you're always going to have some of this going on. And again, the issue is making money at the end of the day, end of the week, end of the month, right? But it certainly messes with you, right? And when you come down from being green to getting back to zero, to going negative, what do we start looking at? When I'm right here, what am I looking at, everybody? You know what I'm looking at, right? I'm looking at this thing over here. It was like, oh no, right? Don't tell me. Yeah, well, at this point, Lope, I'm already negative, right? So yeah, we attempt to take profits, right? And that's one of the fears I talk about all the time. But down here, now we're starting to say, oh my gosh, I was up some money at least, right? And I could have taken some money, and now I'm actually looking at a full loss. Holy cow. Trading sucks, right? So what do you do when you bounce here? What do you do? This is almost like guaranteed. Matter of fact, I have a hard time not doing this. What do you do when you bounce? You're down 3/4 of your money, and then you bounce. You're back to break even. Well, you typically, right? Yeah, you might say break even, but again, it's really a dumb idea. Anybody who sets their stops to break even, I don't even want to talk to you because that's a childish concept. But you're likely going to raise that stop, right? There was your target. You're going to raise the stop to there, right? Saying, okay, there's an inflection point beneath me, a pivot, right? So let's lock that in, and at least now I have a half loss, right? I'm not going to take that full loss, thank God, right? Correct, everybody? Am I pretty good at thinking exactly what you're thinking, right? So then what happens, you get a little bounce, and you come down, and you get taken out, right? And you're out for a half loss, and you're not happy because you had some profit. You're thinking, did I do something wrong? And then you walk away, you come back, and of course, an hour later, 2 hours later, 2 weeks later, if it's a long-term position, you're here and you made your whole week's profit, right? And you look back and you start to get confused because you're following Mickey Mouse trading rules that you found on the internet. And you're talking about getting to targets, and you're talking about don't go negative when you go positive. And you start to get confused, right? Management can be a confusing thing. And the number one reason management gets confusing is because you don't have confidence, right? You don't really know. Anytime I go green, I want to grab it because I'm not really confident if this chart will get there or not, if it's going to stop out or not. And I don't have confidence I can make money by the end of the week, so I better grab profits or minimize losses. And you get stuck in what I refer to all the time as those break-even blues, where an awful lot of people get stuck. I mean, you got to be pretty good to get to break-even blues. And break-even blues, it's like, for a runner, when you hit that wall they talk about, it's hard to get beyond that. It's very hard. And part of the reason it's hard is because you get to a level where you may not know what you're doing wrong. Now, let me show you an alternate way and what I like to do sometimes. There's your stop up. So same concept here, right? I get in, right? Not the best entry, but for whatever reason, there I go, right? And I get what I call the fast money, the easy money, right? It just kind of runs up pretty quickly. And I'm up some money. And my thinking is take some shares off the table here. A third, a quarter, whatever it is. Typically I'll take a third, right? And when I take the third off the table, you know what happens to me? This is me now. You're talking in my mindset, my personal concept, is that I don't care about the stop anymore because I'm kind of break-even-ish, right? Yeah, I mean, depends on the math exactly. You may not be, but you know what? I have a small loss. Now, I'm a big proponent of not worrying about break-even. As a matter of fact, I never used the term break-even. Right in the room, guys? Anybody in the room, have I ever used the term break-even to discuss my management ever in history of 6 years? Have I ever said I move myself to break-even? No, never, ever. What I do, though, and it's maybe semantics, I discuss it as a free trade at sometimes. To me, there's a big difference. Going to break-even is a psychological process. There's no validation on the chart whatsoever. It's just dumb. However, when you have a trade set to break even, and let's say you're day trading, but even long term, the same concept has to apply, guess what I can do now? I can take another trade. In other words, I'm not going to pile into 4 trades as a day trader and then get 4 stop outs at 10 o'clock in the morning and then, go jump out my 1-story window. But rather, I'm going to kind of leg into things. So once I get a trade and it's break even, guess what? I can take another trade, right? Because it's a free trade. So in my mind, this makes some sense. Now think about this. It has nothing to do with getting this trade even. There's a big difference. It has to do with managing the account, right? Because while you're sitting here screwing around with your 1 hour loss, you're not allowed to take another trade. Now maybe you do for the wrong reason, but I mean, if you're following some rules, maybe you can only have 2 open trades at a time. This is your second trade. You can't take another trade, right? And maybe that next trade was the trade of the week. Do you follow what I'm saying? So bad management permeates through everything. A bad entry, bad management permeates through everything. And you may be knocking yourself out of the next great trade because you're sitting here goofing around with this one. When I do this, I can kind of say free trade, and I can go take the next one if I want to. Now what happens is I don't care about this trade anymore. And I'm not even going to look at it until I'm up here somewhere. When I'm up here, I bring my stop to here, and now I get that back half, back 2/3 for the big target. Now, I have a lot of notes on this here. I even have to read them. Maybe I should just read them to you, and then I'll explain them. Here's my notes to myself on this. There are so many wrong conclusions you could take from this slide. There are so many wrong conclusions. And I'm going to talk about this in a minute. It scares me a little bit to do presentations like this because there's so many wrong things you could pull from this. I'm talking to you at a very high level at the moment and trying to understand a lot of different concepts going on. But somebody just tuning in could look at this and say, oh, okay, just take cheap targets and blah, blah, blah. Not at all. I'm trying to get the opposite point across, actually, right? you hear so much garbage when you're learning typically. You have to do this, you have to do that, but what you have to do is make money. And you make money by having the tools at your disposal and learning how to read a chart at an A+ level. Now, what I just did here for you, this is not how you manage a trade. This is not necessarily how I was doing. I'm not teaching you to manage a trade. This way, matter of fact, this is the way I did this. It's very theoretical, if you will, right? But it's a tool. It's a tool that's out there that can be used and should be used depending upon how your trading results pan out for you at the end of the week. I don't think I'm going to go into down that road right now, but that is one of the best tools you guys have to use, whether you're trained by me, trained by somebody else, or whether you're just training yourself. The best asset you have is to be reviewing things and see. And very simply, if I did this a lot, would this have made more money for me? That simple question. Not every type of trade might. There's different trades, there's different strategies, there's different entries, and there's different management concepts. That's why there is no universal thing. That's why there is no great setup. There is no one great setup that we all strive for. The book, Market Wizards by Jack Schwager, the famous thing that I love about that book, right? Interviews 25 successful traders. They all happen to be technical traders. No surprise there. And his goal is to discover the single technical concept they all have in common, right? What do they all do? He assumes that technical trading, you're all sitting there and you see the same thing. What did he discover they all had in common? What was the technical concept all 25 traders had in common? Anybody know? No, well, good, that's a very subjective thing. He's trying to learn what good entries are by mimicking other traders, so he can't say what they are. Yeah, right, Mark. What he had in common was they had nothing in common. There was not one single trader that traded the same strategies as another trader. But what they had in common, if you will, was that they all waited for their unique thing. That's what they had in common. But they're all different things. That doesn't surprise me at all. For a lot of traders, that surprises them. So this is not me teaching you how to manage a trade. What this is what works for me sometimes for my trading style, for my setup, my strategy, my belief system, my personality. And that all kind of blends into this whole thing. Why would you wait this long in the first place? So, and again, this is a theoretical line on a chart, right? But let's say that was really kind of a bad entry, right? Why would you wait that long? Well, here's some reasons why, right? Number one, you might have been unsure of the trade, so you needed more confirmation. Would that be a good reason or a bad reason to wait, everybody? Should be an easy question because I just taught this. Would that be a good thing or a bad thing? If the reason you waited this long, well, no, right, that'd be a good reason, right? I mean, maybe you could argue that, hey, if you're not sure about the strategy, do something else. But maybe you love the strategy, but you just weren't sure if it was ready to go. So if you're unsure, right, I said earlier, the great concept about an entry is to complement your strategy, right? The least sure you are about the strategy, right, the more you'd want confirmation from an entry. So maybe you had to wait this long to get some kind of confirmation. For those of you that understand charts at a higher level, perhaps I wanted a failed sell setup on a lower time frame, right? So it could be a good thing you did that. Now, in hindsight, it may turn out to be, well, maybe that wasn't a good trade in general, but hey, my entry did its job. My entry kept me safe by making sure this is a good strategy before I get into it, the best that I could. But here's some other reasons you could have. Roy, get ready with your answer. What if I waited that long because I just didn't know the chart well enough? What if I waited to get to here because I just didn't know what I was doing? Well, obviously, that's a bad reason, right? You're never going to make money if you're sitting there looking at a chart and saying, okay, when should I get in? If you're looking at a chart and saying, when should I get in? You're a loser. I mean, please understand, a lot of times these presentations I say, you are going to lose. And I don't say that to be negative. I'm just saying, if you do this, I know for a fact you're going to lose because you will, because you can't make money through indecisiveness. If you don't know, anytime you have a chart, and let's take a day trading example. When you have a chart in front of you, when do you determine your entry? As a strategy sets up, when do you determine your entry? And the answer to that question is before you even consider entering the trade. In other words, you have to know exactly what you want that chart to do to get you into it. In other words, when I see this setup, right, and I see something happening down here, whatever it is, and I start looking at this, right? Here's an eyeball. That's not a very good eyeball. I start looking at this, saying, well, I'm interested in this, right? And then I get this, and I start saying, all right, this pullback here, I want to get long. When I'm falling through here, I have determined exactly what I need to see in terms of for this stock to complete its strategy and for me to have an entry. I've already decided what has to happen in here. Does that make sense to any of you? I've already decided what has to happen. So to sit there and say, what do I need, what do I need, what do I need, you don't know what you're doing. Now, you may say, Paul, well, what if you decide you need X, Y, Z and that doesn't happen? Well, then I don't take the trade, right? On one particular trade, I may say, I need to see this to get my entry. The next trade, I may say, I need to see this to get my entry. It depends on this. Next one, so you don't know the chart well enough, that's bad. The lemming tendency. You know what the lemming tendency is? It's one of the stupidest things in trading, and it's almost taught sometimes. You ever heard somebody say that if you're getting into a trade, wait until you see a lot of volume? Have you seen that, people? Have you seen that taught? That a good trader should wait till good volume comes into a trade before you enter? Yeah. Stupidest comment in the world. You have somebody say that. Somebody says that to you. You're in some other webinar or whatever. Ask them why. Why? Why? Why do you want to see it? I mean, we have to be better and smarter than letting half of the world, right, who come in and buy this before we decide. And that's the lemming thing, is you want to see everyone else get in. Well, if everyone else gets in, theoretically, guess what? You just got in at the high on a long, right? If everyone else already bought it, and here you decide, nope, now it's strong enough for me to get in, well, you're just going to be sitting here while it falls, right? We have to be smart enough to know just how to get in and then have all of that volume taking us to our target, right? Not all that volume saying, it's called professional volume and it has its uses sometimes, but for the most part, professional volume is useless for our entries because it comes after the fact. So the lemming tendency is a bad thing. And you may not just understand entry concepts, right? You're waiting because you just don't know when to get in. So you keep waiting and waiting and waiting, and right? I'm sure some of you, have you ever had this experience where you have something you like and it kind of takes off and you go, okay, I feel like I'm chasing it, it's too far gone, right? And then when it pulls back, you go, oh, thank God I didn't get in that, it's falling apart, right? And then it does this, you go, oh, wait a minute, oh, now I'm chasing it again, right? You sit there all day just playing that game with yourself. I'm sure you've all done that because I've done it. And if I've done it, it means you've likely done it. Now I want to stop here for just a minute and say something, and this is not a pleasant time for me to have this conversation. In my notes to myself, I'm just going to read them to you, whether I should or not. It says, stop and talk about the dangers of this presentation. Clueless, trying to duplicate. I'm not sure if that's good or bad. Most people benefit or not from this presentations. Let me ask you a really tough question. When I do presentations like this one here, do you think the average person listening to me benefits or detriments from it? And this is a tough moral concept for me to deal with, by the way. I mean this in all seriousness. Do you think most people benefit or detriment from listening to a conversation like this? Maybe everybody's comment on that. I'm not sure I know the answer. I really don't know that. It's the same question if people benefit or detriment from the free stuff page, right? Really? In my experience, guys, most people detriment from it. In my experience, most people detriment from it. Because it's like putting a gun in the hands of a 5-year-old or, whatever stupid analogy you want to use. And please understand, I don't in any way mean to be demeaning to anybody listening to me, but there's a lot to learn in technical analysis. And I talk about the fact that you need to have an A+ understanding. And if you benefit from this, that's great, right? But the problem is you're getting the tip of the iceberg in these presentations. And unfortunately, I see people a lot who will email me either from something they duplicated on the free stuff page or something that heard in a presentation I did and said, Paul, I tried what you showed me in that presentation on Wednesday and it didn't work. And they show me the trade. And on a scale of 1 to 10, how much do I think that trade that they did duplicates what I showed them theoretically in class or on the free stuff page, right? It's 0. It's like, what are you doing? This isn't what I taught you. This isn't what I was showing or demonstrating. So I honestly have some reservations sometimes, and that's why I wanted to in this presentation just stop for a minute and say that, you got to be careful. For some of you who Obviously, some of you listening to me are seminar students of mine, and this obviously is great additional. It's not really additional information, but it's perhaps phrasing things in a different way. And for some of you who are learning on your own, and you're really good at what you're doing, this maybe can add some things to it. But the point is, you're just on level 1 out of 10 in terms of knowledge that you need. If you want to understand the concept that I referred to a few times, which was talking about the varying scale between the confirmation you need from an entry and matching it to your setup. Do you know what that concept involves? I mean, think about it. It involves everything there is in trading, right? To understand the quality of a strategy and then to say, well, here's the level of an entry I need to match to that. Now, for those of you in class with me, in the entry section of MAT, when I start talking about those, we talk about one of the types of entries, and I say literally the permeation, it's almost an infinite number of different concepts you could permeate from this, right? I mean, there's just what level do you need? You can find it on a chart. And to walk away from this with just the concept to say, oh, okay, I like this, I'm just jumping in, or whatever you get from this course. What I'm trying to show you in these presentations is what you can do with technical analysis, how incredible charts are, and I'm also trying to show you the level that you have to understand them at. And I try to emphasize to you, I'm not approaching that level, I'm not trying to. We take 3 whole days understanding charts in the seminar program. So I just want to give that warning to you that it's not like just, you listen to a few of these and you walk away a genius. It's not hard to learn this, but I'm giving you the summary, if you will. I'm giving you the hot fudge on top of the ice cream, and you don't have the ice cream necessarily. I mean, some of you don't. So these tools that I'm talking about are phenomenal. I think technical analysis is so incredible and exciting, and boy, it absolutely positively works. There's no question about it. But you have to learn it at a good level. And you also have to learn, is it the next slide, I hope? Yeah, it is. Boy, I did it right. You have to learn this whole thing. I mean, you have to learn technical analysis at an A+ level. You see me talk about that a lot. We're coming to charts, by the way, to give you examples of this. And you have to read this whole thing. A+, an A+ understanding of technical analysis is needed as a starting point. And what I'm showing you today really gets a lot into it. You notice I didn't really pull up the strategies at all. Or, well, even I'm going to show you some trades here I did. And I'm just showing you the entry concepts. I'm not even going into the strategy. So what we're really talking about here, in a sense, is the math and probabilities part of the 3-legged stool, which to me is huge. It kind of has to do with throwing a ball on top of the roof, which I'm going to show you in a minute also. And psychology and/or experience. You will struggle if you don't know all 3 of these. And those of you who've tried to learn technical analysis and then gone out and just totally screwed things up because of your psychology, you know what I'm talking about. Psychology is handled by having great confidence, and great confidence comes from understanding charts by starting off with small risk and by building up your account slowly with great understanding. Are there any questions on that? Any questions? Any comments on that? Any rebuttals from that? Well, Gary, I've been sitting here debating if I should say my next comment or not, and I think most of you know me, there's always new people all the time. And I just want to kind of emphasize, as you know, I have fun doing this. I think you guys can tell how much I love doing this presentation, right? How much I love teaching this stuff. I love what I do here at DTS. Not going to do it forever, but I love what I do, and I'll probably keep it going in some form or fashion for a good period of time to come. I love teaching this stuff, and I'm just great with what I'm doing. Now, I like doing the room. I love doing the letter I do. I love doing the seminar program for those of you who want to learn, but I don't care if you sign up or not. I'm not here trying to, I always feel like some people may say I'm walking that sleazy line and trying to get you into a seminar program. I'm not trying to do that. I even try and help you. If you want to learn on your own, I'm here to help you. I'm here to show you the pitfalls. I'm here to help you if you are starting off on your own, that you at least preserve your account and you do the right things. And that if you try to learn on your own, I'm even going to help you do that. Send me some trades. We'll talk about it, whatever it is. And if down the road you want to take a seminar program, that's great, but I don't care if you want to or not. So I'm just simply telling you, there's a good amount to learn, and you just can't do it listening to free crap on the internet, or even coming to these, right? John, I do not want you to talk anybody into the seminar program by telling them how incredibly phenomenal it is. Okay? Yeah, thanks, Mark. That's almost another topic, but you're correct. So I just kind of want to get that out for whatever it's worth. Any other comments or anything? And thank you, John. I do appreciate that, of course. The common thing everyone always says is just didn't know how much there was to know, didn't realize how much there was to learn, right? And when I say how much to learn, it's not really difficult stuff, I don't think. Well, John may disagree with that today, but in a couple of weeks you're not going to think it's all that difficult. It's just a lot to learn. You can't argue with me that it's no more intelligence than a fifth grader is all that's needed, right? No more than that. So it's just a matter of wrapping your hand around it and doing it. Yeah, thank you, Sly. All right, let's continue on. So actually the best part is coming here because here's some charts. Now these charts here are to demonstrate exactly what I just went over and show you examples from the last few days of things that I did. This first one here, there's two charts I'm going to pick on that are my favorite here. Thanks, Dave. T-shirts on the way. Number one, this was WBA yesterday, okay? This short trade on WBA was avoided by requiring a certain type of entry. So now for those of you in the room, yesterday, if you were here, now normally I'm not really hanging around, and I'm not hanging around typically in the afternoon. But WBA, I believe, I took WBA in the morning, and I made a little bit of money on it. Broke even, made a little money. Forgive me, it was a close enough call, I don't know. But I made a little bit on the morning. And then I came back in the afternoon because I wanted to see the setup. And I thought this might be a good short once it started rallying back. So I made some money through here. It came back, and I didn't want to short up here. Now, because of the type of gap this was, I knew I didn't want to short up here. Now, normally I do. Normally I always want to short the top, buy the bottom. That's how you make money. You don't make money doing breakdowns when the stock's going sideways, right? So this is what I normally want to do. But in my mind, this chart was one I didn't want to short the top because I didn't have that confidence level in the strategy that the top was going to be the top. Now, that's a close call. Some other people in the room may have disagreed with me, and you would have made a little money if you did. It probably turned out to be the right thing to do. Look at the stock today, though, WBA. I don't have the chart for it, but look at it today. It took off to the upside. So my analysis of the gap was correct. It was not really going lower. But I wanted to take this lower on proven weakness, and that turned out to be an entry under there. And it did not trigger, so I never got in this, never lost any money. Well, it would have been a minimal loss because it never really would have stopped out. But again, avoiding a trade from saying, hey, here's the setup, here's the strategy. What do I need to see? Stock, you're not going to tell me when to get in, right? I'm going to tell you what you need to do to prove to me. Now, is it always foolproof? Of course not, right? There's luck involved, right? This missed entry by a couple of pennies. Could it have just dipped down, sucked me in, and spit me out? It could have. But you know what? The more you do this, the more you do things right, the more luck you have, the less likely you're going to get sucked into things. So there's an example, and to me, this is my second favorite chart I'm going to show you. I'm going to show you some charts that made nice money. Big deal, show off the money, who cares? But it's not making money sometimes. It's using the entry as that slide said, right? Number one purpose of a great entry is to keep you out of a trade, keep you out of this trade. So there's an example of avoiding a trade by requiring a certain entry, and that was yesterday, right? Somebody in the room, confirm, validate. I had posted an entry to WBA. I think it was under 0.49. Did not trigger, right? So we avoided that. What is this? WBA, in my mind, and for a lot of charts, is that proverbial thing I say a lot that a lot of you think I'm probably had too much beer to drink while I was doing the webinar. I don't actually drink, but that's what you probably think. I always talk about throwing a ball at the top of the roof, right? And what is that analogy? What the heck does that mean? Well, it lines up with the concept I say a lot. And I think I borrowed this from Mark Douglas to some extent. It basically goes, you don't even have to know which way something is going to make money. Now, to the novice trader, you'd think I'm drunk to say that, right? How can you not know? Well, Chris, my biggest issue is the Coriolis effect, right? That always messes me up on this ball in the roof analogy. But aside from that, but seriously, the Mark Douglas analogy, he says something like that too, and he's absolutely, I like Mark Douglas because when you read him, I know he's real because the things he says, I know this guy's really real. And by the way, not everybody that writes books is real, but he's really real because what he says is at a level that a lot of people don't understand. And what he says here is absolutely true. You don't have to make money. And here's an example. And I use this roof as an example, right? When you throw that ball to the top of the roof, here's a kid and he's throwing a ball and it's going up to the top of the roof. On the way up, you may not know if it's going to the backyard or coming back to the front yard, right? But that doesn't mean you can't make money because the ball's going to move a lot, right? So maybe it's a stupid analogy to you, but to me it has that moment in time concept, right? If the ball were to go up here and kind of bounce on the top of the roof for a moment, well, there's that moment in time. You may not even be positive which way it's going, but if you were to be able to take a bet and cancel that bet after the ball rolled 2 feet, which we can do through a stop loss, right? Well, you take a 2-foot stop on one side of the roof and you have infinite potential on the other side of the roof. Maybe that's a really stupid analogy, but to me, it brings home a few points. And now here's my comments to myself to make sure to read to you guys. For 2 reasons, there's 2 reasons this works. I mean, number one, we just may not know which way the ball's going, right? But, and we may we may have to wait for traders to get on the right side of the trade, right? In other words, this ball may have a predetermined direction. We just may not know which way it is. And once it takes that direction, that's the way it was meant to go. But there's another concept too. What if the world doesn't know which way this is going to go? In other words, you're in a stock and you have that snowball effect. You have this balance of bulls and bears, right? You have that little teeter-totter going on. You have the bulls and the bears, and this happens a lot. There's your bulls, there's your bears, right? And all of a sudden you start to tip this way. Well, when you start to tip that way, you know what happens? A few of these people decide to hop off, and it tips more that way, and they hop off. Right? It's a snowball effect. So sometimes there may not be tremendous information on the chart as to which way this is going to go. But once it starts to go, if you understand the chart, you know you're going to get that snowball effect. And it has to do with what I say all the time, with your goal, in a sense, in technical analysis, is to be able to look at a chart and be able to determine to some degree who has to buy the stock there, who wants to buy the stock, who has to sell the stock there, who wants to sell the stock there. And if you have no clue, you should move to the next chart. When you do have a good clue, this is where you want to stop and focus on the chart for a minute. And you may be in a situation here where you're just on kind of the top of the roof. If you go one way, you're saying, boy, you know what? If we go that way, there's a lot of people that are going to have to sell that stock or have to buy that stock, whatever that is. Look at Smith & Wesson. What's the symbol for Smith & Wesson? Look at Smith & Wesson 3 days ago. There was a ball on the roof. SWBI, I think it is. SWBI. I'm not pulling it up, but go look at that chart. When it gapped up that day, there was a little bit of a ball on the roof. I would not have bet my left arm was going higher. But I knew that if it did start to go higher, you would likely get a snowball effect and it would really get going higher. So there's ball on the roof concept. Here is the next chart. Okay, so this one here, this first one, WBA, entry confirmation mandatory. In other words, the strategy did not exist for me. Without confirmation, we're going to head lower. And if we did, could add a snowball effect, could have gone lower in my mind. Now we're on little confirmation. So here, mini gap. Now don't think the term mini gap is a strategy, and anytime you have mini gap, you need little confirmation. It's nothing to do with it. It has to do with the particular quality of the setup you're looking at for the most part. And again, the strategy here is not even what I'm focusing on. It's the concept that here I use little confirmation. So I came in and shorted, boom. We are in what you would call a 5-minute uptrend, a 1-minute uptrend, a 2-minute uptrend. We're uptrending, and I shorted while that uptrend still existed. How can you do that? Well, for all of these, right, it has nothing to do at all with this. How is it that I'm allowed to short that uptrend? This is an intraday chart. It's a 5-minute chart. 5-minute chart, 2-minute chart, 1-minute chart, all in uptrends. How am I allowed to short that? What about that chart, everyone? What about that chart said you may short that, and not only short it, but short it aggressively, right? This is Google from day before yesterday, right? Everybody, what allowed me to do that? Well, you're all giving specifics, but it's not the specific I'm answering. The answer is, well, the answer is not on that chart. That's the answer, right? The answer is what you would call HTF, the higher time frame, right? The higher time frame. In other words, the strategy here said that somewhere between the open and this rally back, we were going to roll over, right? And by the way, had it gone over this top, I wouldn't have been stopped out. That's a little buffer I have in there. So it's the higher time frame. It's a strategy that said, is that Skyman? Skyman, you've been gone for a while, right? Hey, welcome back. I just talked about you the other day. Oh, now I probably can't say what I talked about because you might be embarrassed. I think I said who you were anyhow. Yeah, because we were talking about Roku. Welcome back. Oh, and we were also talking about, I have 3 pilots in the room at one point. Yeah. All right. So it's the strategy that says, hey, this is going to be short. And now I require a certain something from the intraday pattern, the entry, to require my entry, right? It wasn't much because I felt it was like a stock running up, and going to hit his head on the ceiling, and didn't have much higher to go. Now, I'm talking about all this as if it's absolutely positively what's going to happen. Of course, it's not what's going to happen. When I decided to short this on the way up, several things could have happened. Number one, it may never have given me that entry, right? I needed some kind of entry. It may not have given that to me. So I may have just kept running up until I said, forget it. I don't want that thing anymore, right? It could have run up and maybe I was off, but yet I still would have been a winner on that. And maybe I was just wrong. Maybe I got in and it blasted off, and that's called a stop out, right? You have to have stop outs. I don't know why people are embarrassed with stop outs. If you don't have a certain amount of stop outs, you're not trading aggressively enough. Let me say that again. You should be proud of your stop outs, because if you're not getting some stop outs, you're not trading aggressively enough. You need to make money. To make money, you have to take some aggressive entries, and they're not all going to work. They're not supposed to all work. You're supposed to make money. All right, so there's Google, which you can say, yay, made a lot of money, nice job, blah, blah, blah. So that's an entry using a little bit of confirmation. Here is more of a favorite concept to me about entries. And I want you to notice this did not make a lot of money, right? This made some McDonald's money. This to me, though, is the greatest example of a chart of great trading and great entries that there is. And I'll explain why in just a second. I went long there. And this was Space on Monday, I think, right? SPCE. I went long there. I went long on the way down. I ended up getting in. That bar here was 19 cents. And I got in a nickel off the bottom. That was my entry. Now, why am I so proud of that trade? Why am I sitting here saying, this is the slide I want to show off, when it didn't make a third of the money the last trade did? Why is this a trade I want to show off? I put here perhaps the most important slide of this whole presentation. Discuss this for a while. And I can't read the next line because it's the question I asked you. Yeah, it's a little ball to roof analogy. Good, John. Exactly, right. But here's the thing. Whether you like the strategy or not, or whether you like the entry or not, here's the thing. Because of this entry, this thing made money. I want you to look at this chart. This didn't work, right, John? I went long. It was a better short up here by far, right? A short up here made a week's profits, right? So I had the trade wrong. Would you all agree to that, everybody? Can I get some comments from you guys? We're running late tonight, too bad. Tell your significant others that dinner is going to be 15 minutes late tonight. Everybody, could we agree with that? This was the wrong trade, right? Shorting here would have made a week's profit if I walked away, right? Agree? I have a point to this. Obviously, the answer is yes, right? Okay. So this was the wrong trade, right? And anybody who would have waited Anybody who would have waited for a really confirming type of entry would have lost their butt, right? As a matter of fact, the typical person, if I didn't show you the rest of this chart, right? If I blanked out the rest of this chart, I'd just say, hey, let's talk about this. And I know this for a fact. If I blanked all this out over here, right? And I showed you just that. And I said, where would you enter? The typical trader would say, oh, well, look at here. You went over the high of the day, right? There's your 5-minute high, right? Something that doesn't actually exist to any real trader. But there's your 5-minute high entry. We just took out the high of the day entry, right? What would waiting for confirmation of the high of the day, what would that have done for you in this case? What would that have done for you? It would have given you a 100% loss instantly. Matter of fact, you would get smack on the butt so fast you wouldn't know what would happen, right? So here's my point. I made money. Here's the obvious question. What made money? My strategy, my intelligent, thoughtful, well-planned out strategy that I thought about since the night before, did that make me money or did my entry make me money? It's almost a rhetorical question, right? So remember at the beginning, I don't want to scroll back to the first slide. Remember in the beginning, I put up some very bold slides saying the entry is everything. I'd rather have a great entry to a crappy strategy than the other way around. And I also told you, anytime I teach, I don't just want it to go as my opinion. If I give you my opinion on something, I'll tell you, hey, that's my opinion. Take it for what it's worth. But every time I teach, I tell you, I want to prove something to you, right? I want to prove it in a way that it can't be contradicted. Well, this is what I mean. When you trade this way, the entry is everything. The entry took the worst trade of the month and turned it into a half-hour winner, right? So to me, this is one of the most important slides out there, just emphasizing this whole thing. And actually, when you get this entry right on a strategy that you just happen to get right, well, then it looks more like this, right? Here's Hood, H-O-O-D, H-O-O-D. This was shorted during the opening minute. What? Opening minute. Paul, what can you learn the opening minute? Well, not a lot. Hood Wednesday, this is Wednesday, that was shorted opening minute when it broke the prior day's high. Wait a minute, Paul, you must have a typo on the screen. You said that you shorted when you broke yesterday's high of the day. It's exactly what I did, right? How many traders understand that when you break a level, that it draws in both buyers and sellers? And that when you break a level to the upside, that some chart setups would say it's going long and some chart setups would say it's going lower, right? I wanted this. As a matter of fact, if you're going to short something, if you have the right setup, if you have the right strategy, and here comes one of these comments that are going to make some of you lose money tomorrow, but if you have the right setup or the right strategy, would you prefer that if you're shorting into resistance, would you prefer to make a lower high or a higher high? HH or LH? What would you prefer, everybody? If you've already said thumbs up to the strategy, right? Right. Why? Now you're all saying higher high, but how many of you know why? Why would you want a higher high? In other words, why do I want to break that high? Why would I want to break that high? To short. Naturally, I have to have in my head, remember, anytime I'm going to enter something, I know ahead of time what I want it to do. So obviously I like to short and only short. But why would I want the entry to break the prior high? Well, not in this case, John. You're not going to exhaust the bulls, right, in 45 seconds at the opening tick, right? Testing the high. Exactly, the reaction. Eric, there's Eric. You know, Eric could step on the mic and teach the class, actually, folks. Sorry to embarrass you, Eric, but that's just the way it is. What we get to see when we break the high, is what happens, right? You bulls think you got control of this. You bulls think you're going over the prior high and going higher. I don't think you are. But you know what? Let me sit back and watch you. Let me sit back and watch you fall on your face. Now, guess what might have happened? I might have been wrong again. Remember the last trade? I was kind of wrong on space, right? What if I was wrong again? What if it broke the high and just took off for space, so to speak, right? I wouldn't be in it. And the problem is, of course, if you make a lower high, well, maybe you're going to come and break that high. And maybe that's going to be a problem, maybe not, depending on how you took the trade. So here I end up shorting. You see the numbers here. It was under 999, stop 1010. So it was a pretty snug stop. What else do I have to say about this one? Better read my comments because I don't want to. Whoops, I'm on the wrong page. Oh, look at the title of the slide. trusted resistance, so I entered on no confirmation. What? Paul, you said the entry has to complement the strategy. Well, I guess when your strategy becomes a 100, your entry requirement may come to be 0 sometimes. That's a long discussion, which is not appropriate for the time here. What a great question, Zen Style. I wish I was only a better presenter and that I had come equipped with all the reasons for why it was on my watch list in the first place. Oh, but wait, I did. What gives you the right, Zen, to short the break of the prior day's high without any information whatsoever from the entry? The superior higher time frame. This is where the hourly chart looked like, right there. So this is the morning I shorted, right there. Boom, boom, boom. And here's what the daily chart looked like. From a couple days prior, we ran into an area. So you hit an area, and by the way, and again, this is what I mean when I made this comment, that so much of what I say, you could walk away with the wrong conclusion. And if you think that you're going to make money just because you short a prior high, you're sadly mistaken. It takes a lot to understand when you can do that and when you can't. You look at some, I can show you some charts from today. You want to go shorting prior highs and you think you're going to make money? I'm not going to pull these charts up because I don't have my camera up to do that here, but if you think you're going to make money shorting prior highs and that's all the strategy you need, take a look at CCL. Take a look at a couple of the airlines. There's a lot involved. It's what's there, it's what is there. In other words, when you say there's resistance here and it's a prior high, well, so what? What does that mean? Is the prior high resistance, by the way? Is the prior high resistance? Whatever resistance means to you, is the prior high resistance? But not necessarily. It depends. It depends what it is at the prior high, right? If you're in an uptrend, every time you hit the prior high, if you're making higher highs and higher lows, the guaranteed written definition is you're going to break the prior high. So how can you call that resistance? So some prior areas have no resistance, right? And some are huge. It's a matter of what's there, it's how you get there, and it's how you react to it. Remember, you've heard me say before, look for an area and then see what happens when you get there, right? Here's the 60. You can also look at your own charts too, Jack. So this is on the watch list for a couple of days to answer your questions then, right? It was on the watch list. I don't remember if I tried. I know I might have traded it. If we didn't trade this, and I'm sorry, I just don't remember. I mean, I know charts, and I know I don't think. No, I missed it this day, didn't I? Right, room. This was top of my list that day, right? And I missed it, correct? Yeah, because I was mad this day. That 60-minute sell setup right there was a top thing to do, and I didn't do it. So I didn't do it that day. But it was on the list then for a couple of days. And then here this day, you know what happened? Higher time frames came together, and it gave me exactly what I wanted to do. It came and, where's that 1 minute chart again? It came and did what we call a stupid 5-minute pop, right? It opened down here and did something really stupid. It stuck its head up to here, and it got chopped off. What gives you the right to short that? Well, understanding that the intraday time frames are not where the power comes from. The intraday time frames are where we get our concepts to decide to enter or not enter. The power, I mean, the day traders just make ripples in the water, right? We don't amount to garbage, no matter how big you are, no matter who's trading. It's the big money that makes the waves, and the big money's not always there making waves. But when they make waves, that's where the power comes in to get things moving, the picture of power, and then use those intraday gyrations to try and find great entries. Does that make sense? And the last thing I want to point out, most of you understand this, but once in a while I get somebody that doesn't understand the math at all. And they'll say, Paul, come on, man, it moved 15 and 20 cents. Pfft, how much money can you make from that? How much money could you make from that? Well, whatever you want to make, you could make from it. The issue is simply, and I was going to put a slide in here, but I mean, if you get a 15-cent move and you had 10,000 shares, you would make $1,500. If you had a 50-cent stop and you had 500, 300 shares? How many? 3,000 shares? 3,000 shares. You would make $1,500. It's just math. The only issue becomes, hey, Paul, can you get a lot of shares on Hood? And the answer is yeah, you absolutely can. I snagged this just, for some people who would say, well, how do you take 5 cents? This is snagged at 3:30 this afternoon when I thought about putting this in here. And there's about 10,000 shares available on to the penny, to the bid. And earlier, like throughout most of the mid-morning, there's 2 to 3 times that amount. So you could take 10, whatever your risk would tolerate, you could take 10 or 20,000 shares if you wanted to, if you had a $2,000 risk. And of course, you'd make $4,000, whatever it was, on a single trade. So, don't tell me about 10-cent moves. The issue is, can you trade the 10-cent move? Do you have and most everything I put on the screen for me during the trading day is like this, where you can get the share size you need. The only exception would be occasionally when we get a gap. Sometimes some of the gaps, I got to kind of push it because they're not as liquid. We had one of those yesterday, but it's very rare, okay? Yeah, exactly. Jack says a good point too, is that you see there's 100 shares here? I'm just showing you what's showing. If it's showing, it's guaranteed to be here. So if I hit the bid with 10,000 shares, I'm instantly filled 100% of the time, nothing to talk about. But what Jax is saying, which is true, is that 100 shares may be 100, but stay here until I buy 30,000. That's what it may say. So I may take my whole 10,000 just from this one guy. And that's why a lot of times when you hit with some good share size, you don't even see the screen flicker. It doesn't even change. It's not like you wipe out. Thanks for bringing that up, Jax. That's really a good point. It's not like if I sold 10,000 shares or shorted 10,000, it's not like these would all disappear and go, oh, what happened to the screen? You probably wouldn't even notice it. You would probably just not even flicker. You just get swallowed. Now, that's on a stock with liquidity, right? That's a stock with liquidity. Not all of them are like that, of course. My God, you trade Ford, you could buy, I don't know, you could buy 30,000 shares, you wouldn't even be noticed. But those are some stocks that if you try and buy 1,000, you're going to get noticed and you won't get filled. So, it all comes down to understanding tradability of stocks, which, by the way, happens to be a great free video you can watch on the free stuff page, which you can access right here. DisciplinedTradingStrategies.com, go to the free stuff page and watch all the great videos on there. On the free stuff page, besides having the Trade of the Week videos and the prior event videos like what you're hearing today, don't forget there's archive pages for those that go back to the beginning of DTS. And there's also a section called the Hall of Fame that you should start with if you're new. There's a section called Great Educational Videos, and there's a section called For Newbies. And if you're not making money, you're a newbie, so watch the newbie videos as well too. Any questions, anybody? And thank you, Sammy. Retired, I assume, from Southwest 2 Sundays ago. Cool. Great. Well, Skyman, come back and join us. I know Forex, the cool thing is you can trade it early in the morning, which is probably one reason that you do that, because you can do your trading before you fly the friendly skies. Oh, I'm sorry, you're not in the friendly skies. But that's great. Skyman paid off his house with Roku. I'm sure you don't want me to say that, and he did. He did. I know he did. He's in the room every day with us. He's telling about us every single day, and he had a great trade on, and he hung with it, and great job. Thanks, everybody. Any questions? Ran over. Just too much to talk about, but that's it. Nothing else to say. Come join us in the trading room if you want to, blah, blah, blah. See you guys. We have nothing else coming up for a little bit. We have a holiday weekend coming up, 4th of July, and then I have some seminar events. So I'll see you guys probably in a couple weeks for probably the next scanning session or whatever. All right? This will get posted when it gets posted, probably over the weekend sometime. All right? Have a good one, everybody. We'll talk to you later.